Hello and welcome to another update video about ADA. ADA is moving closer and closer to our target area here. You might remember from yesterday's video, well, if you watched it, and I think in the video the day before we talked about that target area as well. That we defined a target area for this move to the upside, and it's defined between 68 cents and 73.6 cents, and that is the relevant target range for wave C. The idea is obviously that we formed after this larger degree fourth wave low in January, that we formed an A wave to the upside, which is basically the first wave of the next wave up, which is the fifth wave. Yeah, after fourth wave finished, we're watching for the fifth wave to unfold. And I mean, I explained it really in detail in previous videos, but the idea is that, yeah, surely, I mean, all of this could be a more substantial top, and we could maybe have completed this entire run from the June 2023 lows already. But I prefer a more extended A, B, C structure for various reasons. I mean, I discussed all of them in previous videos, but in short, in my preferred scenario, I'd like to see more of an extension to the upside, at least to 85 cents, possibly 96. Yeah, and it would probably happen in an A, B, C structure. That's just the nature of the overall structure we're moving within. It basically demands that we are exploring that idea of an ABC structure. And the A wave likely topped here on the 4th of March, and the pullback in wave B bottomed, finished on the 20th of March. That's the idea in a three-wave move, A, B, C. And it's absolutely possible that this C wave to the upside has started to unfold. Do I believe it? I don't know. I'm not really working like that, but you know, it's not like I believe in something or something. You know, it's more like the chart at the moment at least allows us to interpret it that way. But I can tell you that probabilities are not that clear. You know, sometimes I get asked, you know, do you think are you sure about it? Or, you know, there are different patterns. Some give you more confidence, others give you less confidence. And this one doesn't give me much confidence, I can tell you that. It's a larger diagonal pattern. The problem is that the move to the upside from the 20th of March low, it's not an impulse. So yeah, I can explore the idea of an ABC structure, which could form a wave 1, because the C wave could be an ending diagonal, and then we have this larger ABC structure. But is this really a count that, you know, we can have much confidence in? No. And why is that? Because anything that is a three-wave structure could also be a correction. Yeah. So I highlighted to you, it could also be something different. For example, it could be here A wave, B wave, and we test the yellow zone again. And ideally, we're holding then the 50-cent level and could then reattempt the fifth wave. Because it's possible that this fourth wave is still unfolding. Sorry, not the fourth wave, but the B wave. And that would be the yellow count, A, B, C. And this B wave could be quite aggressive. So it's not going to be easy, you know, tracking all of this. But I think the support levels are very clear, especially the 50-cent level. Any sustained break below 50 cents will make me consider a different scenario. Against the 50-cent level, I'm focusing on higher prices. And it's possible that this B wave is still in the making. Nothing that I prefer, because it would get into quite a massive B wave, but yeah, possible, you know. It's even possible to say that maybe this was wave A, that this B wave is still unfolding. That's absolutely reasonable. And then this is an A, B, C of B, and we, you know. So really the support area is what's most important. I try to navigate, you know, with you guys in the best possible way the uncertainties of these corrective patterns, but they are not impulsive, so it makes it difficult. What I can tell you is that, yeah, this is probably a three-wave move up, which I would label an A wave. The move down is likely a B wave, and this is likely a C wave to the upside. We should target this area. And then and that's really then the key moment, if then the next move to the downside is a corrective pullback, it could be this wave 2. And that basically that next pullback will tell us a lot. About the movements of the next few weeks. So wave 1 to the upside, wave 2 to the downside. And if we get a corrective pullback, it's holding higher low, maybe in the region of the previous B wave low. Well, that could be a jump off point for a third wave rally finally. But until I see the next pullback, it's difficult to determine, So it's not so much about trying to, crystal ball here. It's about, look, we had a support zone here that clearly worked out. Scaling into support can be a reasonable strategy. Anybody who did that would be in profit. So not trying to look for the perfect entry, from experience, you might only get the perfect entry like 15% of the time maybe. So don't just don't look for it, just be strategic about it. So, okay, and regardless of the micro count, the support area worked. We're now rallying to the target area. If we peak here and I have a top in place and I see a confirmation, I will add the next support zone. And then regardless of what the micro count is, scale into support. It's an option, it's a possibility with a stop below the zone. And then if it reverses again, which it likely is going to do, it doesn't have to do it, but it's likely going to do it, then the third wave rally can send us into that larger degree target area, yeah? So that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.